Another episode of Beating Alpha. We have a very special guest on that I'm going to introduce you in a few minutes. But first of all, this is episode 77. So John, you cannot see John, but John is lucky with the number. So 77 episodes so far, and this one is very special. I've been talking with John previously behind the scenes. We had a short call, so kind of talked about what he's currently working on, which is very impressive, as you're going to find out in a few minutes. But a little bit about John. His full name is John Azar. So he's the founder and managing partner of Peak 15 Capital, a capital advisor firm servicing commercial real estate operators and sponsors in identifying, sourcing, and securing their capital stack. John is also an executive vice president and managing member of MAC Venture Partners, where he directs acquisitions, strategic development, capital management, and growth. He also oversees alternative financing and investor portfolio development and fund management. And I think we're going to include the rest of the bio down below that you can go, guys, and check it out because it's very impressive. But if I'm going to read the entire thing, it's going to be a long, long introduction. But it's very impressive what this man has been accomplished. And for more information, you can always go to www.peak15cap.com, or you can connect with Azar personally. I guess you wouldn't mind me giving people your email, which is azar@peak15cap.com for future, investments and so forth. So again, it's a pleasure to be talking with you again, my man. Thanks.
Thanks, man. Wow, that was a handful. Yeah, please skip over, that last part or any part. So more is less. More is less. Let's get down to business. Is better.
Well, exactly. I mean, so like one of the things, if we mention, like you've been, you're a co-founder and managing partner of Boston Venture Partners, or the BVP, which is a private equity consulting and finance firm based in Boston. And you guys specialize in real estate development, structuring finance. So you worked on portfolio, which is 1.8 billion, spanning from Boston to Miami to London. So those are some of the things that I'm mentioning, but I'm not even close of the half of the bio that you just sent me. So the full is going to, of course, is going to be included in a link down below, But
that was back in the good days. That was back in pre first recession, 2008, pre 2008. We had a good run with that company.
Got it. So let's talk about the beginnings. The journey into this, entrepreneurship endeavors and all the different ventures, and how did it started for you? I kind of know your background a little bit as we had this call before, but if you just tell the audience, how did you start it? All these different ventures, and again, these amazing businesses, like where did your journey start?
Journey started, entrepreneurship, I think is inherently, probably was in me from the get-go. My dad was an entrepreneur. He was a lawyer by trade, and he left a very cushy government job to start his own firm and expand and eventually send his kids overseas to the U.S., to America, which is where we're Syrians initially, and we all immigrated from Syria to America back in the 80s. And so I think it started probably there, kind of put the bug in all of us. My brother Tony was probably the first entrepreneur in the family, and my sister is an entrepreneur. She's a doctor by trade, and she's a biotech entrepreneur. Started a couple of different companies. So it was only natural for me to follow the footsteps, as an underperformer in the family. So, I mean, I started out my career in investment and finance, and then mostly doing like equity trading, wealth management, and then kind of I actually fell into commercial real estate, to be honest with you, to some extent. We worked on, me and my partners in that venture that you mentioned, Boston Venture Partners, worked on a couple of projects while we were at Morgan Stanley and Royal Bank of Canada Capital Markets Group. And those projects involved high level funding, debt funding. Mostly we worked on raising essentially a debt offering for a couple of very large developers in different municipalities. And then as a result of that, those guys came back to us and said, hey, if you guys ever leave your big cushy firms, we'd love to work with you independently and help us structure projects. So, ding, 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 that kind of, gave us the idea. It was like, hey, those guys will work with us. Why are we working for somebody else and making them a ton of money? Why don't we go out on our own and make ourselves a ton of money and work with those developers nationally? So that's what we did. We kind of opened up shop, Boston Venture Partners, and started working with large scale developers that were based in New York and Miami and Philadelphia and Boston, and kind of worked on different projects, anything from condo conversion projects to urban reuse projects to old Navy shipyard conversion projects, brownfield projects. I mean, it's a lot of, and then most of them were large scales. Most of those projects ranged anywhere between 100 million to 800 million in size, 900 million in size. So it was a good run, like I said, between 2004 and 2008. And then in 2008, we, the crap hit the fan, and we lost everything. We lost our clients, we lost our deal base, we lost our deal flow, everything just dried up like a raisin overnight, and we had to close shop and kind of reinvent ourselves.
Mm-hmm.
And the journey continued, in different ways.
Yeah. So I just want to go back to the point where you said that kind of you felt like you inherited the entrepreneurship spirit or the gene. So would you consider that's the way it goes, or somebody can become a business owner if there is nobody in a family that had any business before?
Oh, absolutely. Absolutely. I mean, anybody could become a business owner, and the entrepreneurial spirit is not just germane to one type of people, or it knows no nationality, no race, no gender, no ethnicity, no religion. It's anybody could have that entrepreneurial bug, and anybody can take advantage and move themselves forward. All they need is the drive. And the willingness and the guts to do it, and that's it, and the patience. Sometimes you have to have patience. Entrepreneurship is a really a fine balance of, and it's an equation of guts, patience, fortitude, wisdom, and balance. I mean, so it's if you have to balance all these things out together, and you get an entrepreneur. Because entrepreneurship, even though a lot of people tell you like the biggest thing in entrepreneurship is fortitude and guts and daring and resilience, and yeah, those words are right. You also have to have the wisdom and the balance to make sure that you can actually do all these things and still live somewhat of a life. I mean, you can. The one thing I tell entrepreneurs, you have to know the wisdom to know how to breathe yourself if you become an entrepreneur. Because if you can't breathe, it doesn't matter how much of a drive you have. If you can't get any oxygen into your life, and take care of yourself, especially if you have a family, take care of your family. Entrepreneurship is not going to work for you. And you're going to end up making decisions that are probably going to impact you negatively in that way. So it's a fine balance for sure.
Yeah. So how does someone acquire these traits? I mean, can you get those by reading a book or watching a video? Like, because you're talking about wisdom. I mean, how many years or hours, like, how do we put it for somebody to like, oh, you have wisdom now? Where do you?
Yeah, I'm not talking about wisdom. I'm not necessarily wisdom you gain over time. You don't have to have wisdom right away. I mean, in fact, probably the less wisdom you have initially as an entrepreneur, the better, because you don't know what you don't know. And sometimes when you don't know things, it's better for you to so you don't second guess yourself.
Mm-hmm.
I mean, going back to that first company I told you about, the first venture, Boston Venture Partners. And I didn't know anything about commercial real estate at the time. And I knew about finance and investments, but I didn't know anything about commercial real estate. And there was a time where I was sitting with my partners in a couple of big offices in New York City, with, across some very, very big developers. And we were looking at ourselves saying, what the heck are we doing here? If those guys only knew how little we knew about commercial real estate, they would kick us out of this office in 2 seconds. So, it's sometimes you just have to be stupid and just go for it. And even though you don't know as much as just go for it, and kind of, as long as you know what you're doing and you're putting the right pieces in place. I'm not saying be stupid and just go for it, and regardless whether you're going to fail or not. I mean, you might fail. Yeah, you might fail, but it's okay. But as long as you have somewhat of a good plan, somewhat of a good idea of what you're doing, and you have an end in mind, and first and foremost, act like you know what you're doing, because people gravitate towards that confidence that they see in you. And if you are not confident in yourself, nobody else is going to see that in you.
Oh yeah, that's for sure. So I would love to talk about, again, times like these, where there is a lot of uncertainty, as we spoke before, the COVID, and like 2008, there was a lot of uncertainty at that point as well. And again, you came to the point where you have to, leave the business. So maybe you can talk about that time, because I think a lot of people can relate to what you've been through, to what a lot of people going through right now.
Yeah, no, absolutely. I mean, it was a different kind of recession back then, I think, than what we are facing now. And markets were different. I mean, commercial real estate was different. Real estate in general, there was a lot more leverage back then than there is now. The leverage now is, I think, very judicial compared to what it was back in 2008. 2008, there was just stupid leverage that people were doing, both on the retail, investor side, or just normal consumer side, and both, and as well as on the corporate side. So I think leverage is different this time around. There's a lot of cash on the sidelines that did not exist back in 2008. A ton of cash, a ton of capital on the sideline. And that is also a lot more judicial in where it's going and how it's being dispensed. So people are a lot more cautious this time around. They know what they're doing. The knowledge base is much more there than there was back in 2008. I mean, if you just look at entrepreneurship in commercial real estate, take for instance multifamily housing, and the amount of companies that are now in the market compared to what they were back in 2008, there were hardly. That was not a thing back there. I mean, being a multifamily sponsor and entrepreneur was not necessarily, something that was a trend back there. That was seen as something that was done by bigger company people who just had a ton of money in it, very well capitalized, and it wasn't as, I mean, there was a lot of people doing it, obviously, and going through a different coaching program and doing it back then, but nowhere near how it is today. So that's very different. It's very different from back then to not right now. And, so there's a lot of people now that are coming into the business that have a ton of energy, ton of knowledge, ton of connections, and they're leveraging of their best skills and showing the world that, hey, it could be done. It could be done by starting out one piece at a time, one piece of the puzzle at a time, and putting together your network one piece at a time, and then doing a project or doing an acquisition and putting the right team together. That's essential, and that's what's making all these successful entrepreneurs and multifamily successful.
Mm-hmm. That's right. So talking about scaling business, and again leveraging, again with the Mac Venture Partners, you've been, I mean, yourself and the brother, as he's involved in the business, right? So I mean, all of you guys, the entire team scaled from 2,500 units to 6,000 and a half units. I mean, what time frame are we talking about? I mean, and how people and, smaller maybe operators who are watching this episode, they're thinking, I have 170 units and it's very difficult for me to double that in a year. So like, how long did it take for you to accomplish that? And what maybe, roadblocks have you been facing? And I mean, what's the process behind, scaling, like almost tripling your portfolio?
Yeah, I mean, my brother started the business. He's the CEO of the company, and I give him a ton of credit for a lot of our early success and a lot of our later success as well. So he's a fantastic businessman. He's started out in buying, one multifamily asset, and then in our first acquisitions, the first one, the second one, the third one. I mean, we had to rely on sort of our small network of friends and family investors that we started sort of growing, and that's what a lot of multifamily syndicators and sponsors should be able to do in their first couple of acquisitions. They leverage the network that you have organically and get as much of out of that as possible. I mean, your investors are going to gravitate to you who know you best. And those who don't know you, hopefully they'll know you, or they get introduced to you by someone you trust and someone they trust also. And that's really how we started growing our network of investors. Somebody, that we know, somebody that my brother Tony knows, got introduced to somebody else, and they introduced us to somebody else. And we were able to collaborate together enough to buy an 80 some unit apartment complex, and then once we bought that one, the next one was slightly easier. The next one was slightly easier than the one before that. And then, it took a few years to get to about, a certain scale, what you mentioned about 2,500 units or so. And then we had to kind of retool. Actually, we had to retool even earlier than that. We had to retool around 1,500 units or so. We took property management in-house. So we became vertically integrated. We chose to do it at that point. Other sponsor syndicators can sometimes choose to do it at a different, inflection point in their evolution. Some people may choose to do it when they hit 500 units. It just depends what makes sense to you to take property management in-house. We chose to do it around, 1,300 units. And then the next inflection point for us was around that 2,000 unit frame. And that's when I sort of came started being a more active part of the business and kind of expanded. We launched a new brand. Mac Venture Partners got kind of formed at the time and took over a previous brand that was there, which was Mac Properties. And we continued to expand our model and our business and kind of take on different strategies. So we had to retool the business a couple of times since then. I mean, we retooled the business once to start taking on more sophisticated investors and probably deal with more private equity money and more large family office money. And then, we had to retool again once we hit 4,000, 5,000 units to be able to deal with more institutional investors. And all along, you are always kind of retooling and re-examining yourself, because internally you have to retool yourself to be ready for your growth. Growth is not just external, it's internal also. So it's the way that companies grow, if they're not growing internally and they're only growing externally, it's gonna be a mismatch, and they're gonna at some point struggle a lot. So your growth have to be both internal and external. So just because you're ready to take on, just because you have the capacity or not the capacity, actually the ability to buy a lot more units, you may have access to a lot of capital, and you may be able to say, hey, I can buy 500 units in one shot. That's great. Maybe from a capital perspective, you can buy 500 units at a time, but from a capacity perspective, can you absorb 500 units into your portfolio? Are you internally ready to take that on? And that's really have been some of the biggest lessons we had to learn at Mac Venture Partners, is we had to kind of retool internally and be ready for growth and reshape ourselves through the years.
Okay, so I would love for you to expand on a fact that you said you have to kind of retool and regroup and make sure that you're ready for external scale from an inside perspective, which is again the teammates and putting the right people in place and maybe getting some extra people. So can you talk about the hiring process? How do you put those people in place to make sure that you can execute of scaling business to that level?
It's building the right team internally for yourself and knowing how the pieces of the puzzle to put together. The way that we did it is I started building relationships before we needed them, whether it's institutional relationships or partnerships with, law firms or third party administrators, or, all those people that you have to all the team that you have to put together essentially through the years. I started building those relationships, especially with institutional investors and private equity investors. And I started asking, you start asking the questions. Hey, what do you need to see from us in order for you to be comfortable with us? Maybe not now, maybe 6 months from now, maybe a year from now. What do you need to see from a company like us if I was to bring you a deal of this parameters and that demanded this much money, beyond the money factor, what do you need to look for from a sponsor? So what do you need the sponsor to look like? And I started asking these questions all the time from a lot of the meetings. And I started having these meetings, a lot, with institutional investors when I didn't need them, because I wanted to build the relationships. I wanted to kind of build the trust factor and the, and the contact before I even needed them, before I even have had a deal to bring to them, because I wanted to know what we needed to do, that when we get a deal, that I can go to them and say, hey, look, we have these mechanisms in place. Here's a deal. Here's what you told me last time we met, or when we first met a year and a half ago, you said you wanted this. Here's what I have right now. Here's the deal. And boom, all of a sudden you become a lot more valuable, and your credibility goes, scales way up. So that's really what we did through the years, on and off through the years.
Awesome. So how much time and energy actually you're dedicating towards, Mac Ventures, venture partners currently? Because I know we have another venture that just came up, Peak 15 Capital, that I would like to, for you to expand and talk about what you guys are doing in that space, because it's very interesting. But like, how much time do you still putting into the Mac Ventures at the moment?
So we're not doing acquisitions actively necessarily. I mean, we still look at acquisitions. We just we decided this in this pre-COVID, even before even COVID hit, we saw the market was very frothy last year, and we decided to kind of step back from our own acquisition. Doesn't mean that there are not any right acquisitions for people. Obviously, acquisitions are still going on. Just from our own standpoint, from our own portfolio, and from the way that we underwrite, and the way we are very, very conservative in the way that we underwrite and we look at numbers. We decided that we needed to kind of take a step back from the market and not do as many acquisitions. So that sort of step back from the market took place before COVID, and it's continuing this year. And we're going to have to see what we're going to have to do post COVID. I mean, we started even planning out a fund, before COVID last year, a large fund, and that we put on ice as we kind of approach, and especially as COVID hit, we definitely decided to put that on ice. So we still look at assets, we still look at acquisitions, not as actively as we did before, but we still look, and if something pencils in really, really well for us, but it's going to be a needle in a haystack, we may go for it. But we still look at some projects, but just not as like we used to last year. Especially this year during COVID. And so we need to kind of see an exit out of COVID in the next, 10 to 18 months to see where our strategy is going to be. And luckily for us, we can kind of afford to take a step back, take some chips off the table, maybe take care of some of the investors with some liquidity, and see what 2021 is going to bring. Peak 15, as you mentioned, I started about a year ago or so, a little over a year ago. So I started the company again pre-COVID. We saw, I saw a disconnect in the marketplace for sponsors who are seeking capital, and the way that the capital providers have been approaching sort of the business with sponsors. I noticed a lot of capital providers are not necessarily aligned from a knowledge base with sponsors. A lot of capital placement companies, they know a lot about investments, and a lot of them have come from Wall Street side, but they don't know enough about multifamily or commercial real estate. So there's a lot of times there's sometimes a disconnect, and it has to be like, some gap filling when I use a capital placement company myself as a sponsor, and have to explain, this is how we underwrite. This is why we underwrite this. This is why, we do this. So there's I noticed there was a slight misalignment in knowledge, and that's what I wanted to kind of gap for with Peak 15 Capital, is me as a sponsor, putting myself on the side of the sponsors, creating a company by sponsors for sponsors, to find them capital and into their deals. And in the capital I find for sponsors is really just institutional and private equity capitals. My intent is when someone engages me, when a sponsor or syndicator engages Peak 15 Capital, that I bring to the table one check and one check only to take care of their capital needs.
Okay, I got it. So where do you want to be with the peak 15? Because I mean, you just started not long ago. So what is the plan for you to be, like, let's say in the next couple of years?
The plan is for us is to be a premier capital provider for commercial real estate in general, not just a multifamily. I mean, we've worked on projects that are in hospitality. We worked on industrial project. We have clients now that are doing a lot of developments, ground up development, um, as well as stabilized assets. I mean, obviously our bread and butter is stabilized assets. That's most knowledge that we can bring to the table when there's a stabilized asset acquisition. But we can certainly work with also developers who are developing ground up developments, and syndicators who are buying brand new development or brand new construction, to provide them capital for that. So yeah, the goal is to be a premier recognized name in the capital advisory platform, for syndicators and for commercial real estate operators in the
Mm,
next couple of years. So that when they think that they need any kind of capital, that they need large scale capital, institutional level or private equity capital, that they think of Peak 15 as a Peak 15 Capital as a premier name in the industry.
got it. So what are you guys currently doing to make sure that you're gonna get to that level? I mean, you know, because currently, by the way, it sounds that you're kind of doing word of mouth, you know, recommendations for now, probably as working with these, you know, construction companies. But do you use any marketing approach to make sure that you know you're reaching more people at the same time also?
We're building it one brick at a time. So it's yeah, you're right. It's right now it's a lot of word of mouth. My involvement and my history in as a sponsor myself in the sponsor community, in the syndication community is luckily for me, thank God, has been very beneficial. And I know a lot of people that know me and know the work I've done, and know where I've been and where I'm headed, and hopefully will give us a shot at their business if they're raising capital for their project. So yeah, that's one part of it. Obviously, we have to employ other things to continue to grow. We have to proactively market ourselves. And these days we're using anything from social media exposure to putting out a lot of knowledge base information out there, value add information. We are launching a podcast in the next couple of months as well. That will be not necessarily just for Peak 15. It will be an independent podcast, but hopefully it'll offer enough knowledge base and value add to people that will be another sort of funnel for Peak 15 Capital as well as Mac Venture Partners. And so yeah, I mean, my approach to growing any business has been, go out there and provide value and show value first, and then hopefully business will come later. And that's how I approach even relationships. I mean, people that I'm connected with, whether, I do a lot of coaching and mentoring, and so, even from that standpoint is that, hey, just put out enough information and value and take care of people around you, and hopefully those people at some point, the karma will come back to you in a good way.
Mm, love it. Again, talking about giving back, I see now that you're on your bio that you're on a board of directors on several nonprofit organizations at the moment. So maybe you can talk about why is it so important for you to give back to the people also?
Well, listen, I mean, it's giving back it's our way of hopefully dedicating. It's giving back sometimes could be not necessarily just with money. Giving back could be with
Time.
time, could be
Yeah.
with effort. Time is really our biggest commodity right now. It's not just money. I'm not a rich guy, so I can't really strike big checks to organizations, but I would love to dedicate more time to them and give them some of my time, which is valuable to me, and hopefully hopefully the time and knowledge is valuable to them as well. So it's if you can afford to give time, and if you can afford to give energy, if you can afford to share knowledge, that is really the biggest gift that you can give to some organization, especially in terms of nonprofit organizations who are relying on the generosity of people's time and people's knowledge for them to grow. Obviously, they would love money also, but if you can't afford money, some people look at being involved in a nonprofit organization as, well, I don't have enough money to write big checks. Well, you don't have to write sometimes big checks as long as you're kind of putting in the effort yourself, or the time. Doing small things like volunteering is huge for some of those nonprofit organizations. And it's rewarding. I mean, it's hopefully when you do it enough times, you will get some rewards out of it yourself and feel like you're giving something back. And which goes back to, I don't know, it's very, very basic human trait for me, is if, giving back is in a way makes us all hopefully feel better.
Oh, that's it for sure. Because we are here put in place for whatever reason, but one of those reasons is definitely to give back in some shape or form, as you said. The money, the time, just doing the small stuff. Most of the time it goes a long way also. So, I would love for people to get in contact with you because, again, you're providing a lot of great, valuable information first and foremost. And again, I love what you guys are doing with the, Peak 15 Capital also, which for that reason, I think people who are watching in, if you're involved into multifamily construction, some sort of a real estate, company, and you're looking for a man just like John, you should get in contact with him. But what will be those main social media platforms that you guys are using currently so people can get in contact with you?
Yeah, we're using Instagram in a big way. You can find us on Instagram, Peak 15 Capital. You can find me on Instagram as JJ Azar. LinkedIn is a big platform for us. We use LinkedIn a lot. So Peak 15 is on LinkedIn, Mac Venture Partners on LinkedIn, and I myself is on LinkedIn as well. My full name is Jalal John Azar. So you can find me there. You can find me under John Azar. And obviously, as you mentioned in the beginning, you can always email me. It's, the best email for me is azar@peak15, peak15cap.com.
Got it. So it's been a great time. I mean, talking with you for a second time. I know it's kind of, quick interview, but I would love for people to reach out to you and kind of discuss some of the things, more in personal, because those things take a little bit of time to explain. And we just have so much time available in the show, but it's been awesome. I mean, you have your hands full with what you're doing on currently. And again, with the Peak 15, I think you're going to help a lot of real estate, investors at the same time. But, I wish you to accomplish all the goals that you have set up for this year, because I know we have some big projects coming up also. So I'm sure that's going to happen. And again, guys, just make sure that you contact with John and go check the website. Of course, all the links are going to be down below for you to go and check. And John, I really appreciate the time spending, here with us today on the show. And guys, as always, I'm going to see you in the next episode. Thanks for watching.
Of course. Thanks, brother. Appreciate it.